Hello everybody and welcome to our Before the Bell in 3D live session. Today is August 7, 2023. My name is Jose Blasco. This is week 32. Let me get rid of the presentation slide so I can show myself on the screen and say hello to everyone. How are you everyone? Pleasure as always to begin the week with you guys. US markets, US equity markets to be precise, will start trading in 1 hour time. So it's the perfect time, as we do every Monday, to get together, to look at the markets, to understand what's happening out there, have a little bit of a review so we are all focused so we can have a good trading week ahead. Before we get started, as always, I would also like to highlight on the bottom part of the screen our financial disclaimer. You may have attended our sessions before and you've read it already. If that's the case, great. If that's not the case, for sure, it's an important financial disclaimer and counting on you all to read it completely. It's just a few words, it's not that long. Anyway, so as we are getting organized to get started and also to give a little bit of extra time for everyone to be live with us, so I wanted to mention that I'm going to be combining two sets of information. One is what you see on the screen, which is real-time live charts. The other one is going to be our newsletter, where some of the information I'm about to cover, it's in there. We send that newsletter Monday morning Asian time, which is still Sunday night in the US. So really before the week begins, so we get ready for it. And in that sense, if you ever miss those sessions live, I guess it's quite convenient to have the newsletter with you, which you could sign up for it very easily. It's free and you get it in your inbox. By the way, in case you have not done that yet, which you should, let me highlight quickly a QR code and a URL where you can go and sign up for the newsletter, because again, I guess it's quite convenient. Let's say one day you cannot attend the session live, so you can always go back and take a look at your climates or your UFO prices, or your volatilities, and everything that we're going to cover today. I'm about to start with the charts. Last thing before we start, we're going to cover 5 markets like every Monday. Probably the relevant markets in the world. 500 index future. This is going to be the largest equity index market in the world. Crude oil, which is going to be the WTI crude oil contract that trades in the NYMEX. It belongs to the CME. That is the largest oil market in the world. Gold, another CME product trading in the COMEX exchange. Gold futures as well. US dollar, in this case, we switch to the ICE exchange. Largest, most relevant currency in the world. This is going to be the US dollar futures that we're going to look at it. And also Bitcoin. Again, one of the most relevant cryptocurrencies as well. So again, very relevant to go through these 5 markets, understand what's happening, because obviously there is no guarantees. There are no guarantees. There is no magic formula in trading. It's all about managing the mindset, your return and your risk, and your ratios between the risk and the reward, and all of those things. But certainly, if you have the right tools and you are, very importantly, focused on what's truly happening in the market, so instead of being biased or being subjective when it comes to your approach to trading, so obviously that's going to help you to do a better job, at least from a common sense point of view. I guess I make sense. First market, we're going to analyze the S&P, and let's do that using a real-time chart. So when looking at the S&P, the first thing I would like to point at is our climate here on the bottom part of the screen. Okay, which, as you can see, the climate is a red color on the S&P, and I have a couple of indications I would like to mention when it comes to this climate. So number one, if I'm in here where the statistics are, okay, here we go. So we can see that we are in a down climate, right? And we know we are in a down climate because the color of this, let me move this to the right place. Here we go. So we're in a down climate, and we know that because the color of this dot is red. I didn't want to do that. Sorry about that. Here we go. So the color of the dot is red, which means down climate. Okay. Okay, we know it's a down climate, but 2 things to say about this down climate. Number one, notice how we transition from a thick dot to thinner dots. And those thin dots, what they mean is that the climate is no longer confirmed to the downside. So there is indeed a directional component, and if you were to look at the candlesticks, you would see the S&P going down. But the fact that statistically speaking, that climate is not confirmed, basically tells you that, probably is not going to be remaining in that stage, because, there is not a market condition. There is no market condition that suggest, statistically speaking, that the market is likely going to continue moving in the direction because it's not confirmed. Okay. Beyond that, statistics for down climates, as you can see here, are 3. So normally, after we get a down climate, 3 candles moving down, that's a normal thing to happen. 1 standard deviation, 68% of the cases. So once we get that, that's a normal thing to happen. It's normally what's going to happen in a down climate. Sometimes it's less. And you can see here, it's only 2. But again, typically, again, those are statistics. So a normal thing to happen is 3. Guess what? We already reached 3. So if the market continues falling tomorrow, there's going to be 4 or 5, where a normal thing to happen is 3, not 4 or 5. So in other words, we may start reaching levels of non-sustainability to the downside while the climate already shows it's not confirmed. So again, there is a possibility here for a turning point at some point as this market is going down. Now, when it comes to turning points, okay, and it's very important to understand then the next dimension to the market analysis in 3D, right? So the next dimension is going to be those UFOs, those round circles that we can see on the screen, those flying saucers, which represent, when they are green color, buy on-field orders. They represent, when they are red color, sell on-field orders. And guess what? We got buy on-field orders located at 44.76, where the current price for that market is 45.11. So in other words, if the S&P was to fall a little bit, okay, we're talking about 35 points or so, so it's going to hit a price point where on-field orders are expected to be. And as those buy orders hit the market, so then you would expect the market to start moving in the opposite direction. So to be honest, it's lining up very well with what statistics suggest based on autoclimate below, which, by the way, the tools I am utilizing are in our website. In case you have never visited our website, I would like to welcome you to do so. Take a look at the apps section and you will find the apps. AutoClimate is free. There is a one-time installation fee, which is nothing, and then it's free forever. Auto UFOs is a subscription tool, so you can go ahead and take a look. There are different types of subscriptions, monthly, yearly, etc., including lifetime, so you can go ahead and take a look. But anyway, so the point is that the climate is getting exhausted on the way down, and if the S&P was to drop for a little more, 35 points, so now very likely it's going to turn in the opposite direction given the buy orders found at this level, and that would generate a change of climate, which, statistically speaking, duration of 8 candles on that we have on the S&P. And by the way, is 35 points a lot or not? Well, guess what? This is where we now talk about the expected moves, which is the next dimension in our analysis. Okay, we have expected moves for the S&P on a daily basis is 48 points a day. So obviously, dropping by 35 points today, it's definitely doable because we are expecting a size of a move in a daily basis of 48 points, in a weekly basis of 107 points, in a monthly basis of 222 points. And by the way, this is extracted from looking at options prices. We basically take options pricing models and we, I hate to oversimplify, but I guess it makes sense to oversimplify at times. So we reverse engineer those options pricing models and we basically extract, given the price of the option now, what is built in when it comes to an expectation into the future. The more expensive an option, the more people are willing to pay for it because they expect a lot to happen. If they didn't expect a lot to happen, they would not want to pay a lot for it. So in other terms, in other words, there is something in the options called the implied volatilities. And again, I'm just talking about this at the speed of the light here, but I guess it's okay. So basically, you take those values of implied volatility, reverse engineer the pricing models, and come up with moves which are now measured in points. So we are talking about 48 points a day. That's the expected move. Okay, so with the S&P, I took a little bit of time here to go over this information so it's clear on the format I am utilizing to analyze the market, especially if you are new to this stream and this is the first time that you are attending. And now I'm going to speed up a little bit more with the next market, which, as you can see on the screen, is crude oil. Okay, so let's begin now with our analysis of crude oil. Let's look crude oil. So 1, 2, 3. Here we go. Here's crude oil. Here are the UFOs. Thank you very much. So we have crude oil, and crude oil, it's really showing a spectacular price movement, and this is a fantastic opportunity for me to talk about one of the most commonly used or most known quotes of Wall Street that says the market can remain irrational for longer than you could remain solvent. Okay, I believe these are the words. Maybe I did a little bit variation of the words, but the meaning is there. And here you can see how a normal thing to happen in an up climate for crude oil, which is obviously up because the color is blue and the dot is thick. So we are in an up climate, and a normal thing to happen is to have movements of 7 candles at a time. Well, guess what? We've been in this climate for 23 candles, which is like almost 4 times 7. So in other words, this is 3.5 standard deviations of what a normal thing to be is, which is statistically speaking is close to impossible. But look at that, it's happening, right? So that's why it's so important to manage risk when we trade. We never trade naked. We never trade with no stops, with no contingency plan, even though we use tools that help us to build an edge, develop an edge in the market. We certainly develop our skill by practicing and even build up and create some confidence for us to trade in a timely manner and act when it's time to act. But still, there is no guarantees in trading, and this is a beautiful example. I love to show examples where things that were supposed to happen don't happen, especially for the ones of you who are newer to the market. The ones of you who are experienced, you know that very well, isn't it? But for the ones of you who are newer to the market, we cannot be romantic in this game. We have to be cold-minded, focused, objective, systematic, mechanical, and all of that. I guess you get my point. But anyway, I'm diverting a bit here. So let's continue the analysis. We're in an up climate, which technically it's unsustainable, but I said that for a couple of weeks and it kept going. And one of the reasons why it kept going is really because significant sell on field orders have not been found. There were some on field orders that we found around this price point. Last week I did point at that, and they did create a very large drop in price for crude oil for one day. But guess what? They were also later in time, if you had used auto UFOs, if you are a user of auto UFOs, you knew that because there was a green UFO there on the chart a few days ago, and from there price started moving higher again. So again, what is likely going to happen here, I would guess, because obviously our sell-on field orders are a little further up, our buy orders are way lower, and there are no more buy orders close to price. So I would say that what's likely going to happen is to have maybe a little bit more intensity to the upside given the trend, just hit those sell orders, and from there we're probably going to go back down all the way to 76. That could certainly be a case, okay? So let's be ready for those moves. Those are market opportunities, and again, it's all about timing and managing the risk. And obviously, everybody has different methodologies. So just pointing at some possibilities, of course, to be tuned, to be adapted to your specific trading rules from your trading plan. Okay. So climate, sunny, sell on field orders 8406, buy on field orders 7687, and then expected moves based on options on crude oil futures. 1.46 points a day, 3.22 points a week, 6.71 points per month. Gold is the next market that I am going to analyze. Here we go. And we are moving now into gold real time. So gold, 1, 2, 3, here we go. So gold is showing us now sell-on field orders that were not available last week. So this is a new pocket of sell-on field orders, as we are dealing with a blue climate, which is not confirmed. So technically speaking, we are in a blue climate, but very likely what's going to happen is that it may rally a bit more and from there collapses until the next pocket of buy on field orders at 1944.5. Again, especially the fact that the climate is not even confirmed tells you that the strength to the upside is pretty limited at this moment in time, and therefore those sell-on field orders have a high potential of being very powerful. But it will require the gold to rally to 1986.7 before those sell-on field orders start getting filled. So that's the type of market condition that we have here. We have a sunny climate, careful, is not confirmed. Sell-on field orders 1986.7, buy on field orders 1944.5. The expected moves in a daily basis 15 points, 33 points in a week, 69 points in a month. That's what we are expecting from this beautiful metal. US dollar index futures is the next analysis that we're going to do. Most important currency in the world. New pocket of sell-on field orders. Price came up earlier today, actually, during the Asian trading session, hit 102.17, as you can see, and basically like almost a perfect reaction to this dotted line, which often is not the case. Often price comes a little bit inside, but in this case it was almost impeccable, perfectly perfect. So price came back to where the UFO was. That UFO was identified last Friday actually, and price came back today during the Asian session and started falling down. Okay, so as you can see, there was a moment in time where this blue candle was very long. Okay, so we have an up climate in the case of the dollar. It's been running for 7 when a normal thing to happen would be 5. So given the fact that the buy orders are located all the way down to 99, that UFO was just formed on Friday, and that the climate has lasted 7, which is more than 5, which means that statistically speaking, we are dealing with a market which potentially is reaching the unsustainable territory. So I would not be surprised to see the dollar to go down potentially aggressively, which may imply a very big rally in many, many markets worldwide. Now, could dollar continue going higher? Yeah, for sure. But not these 1, 2, 3, 4 UFOs in a row. It's going to be very difficult to go above 104. Okay, so it's either it's going to fall hard or it's going to be a lot of zigzagging, very boring type of market movement for a while until buy orders and sell orders get absorbed. So this is my reading out of utilizing our tools. Again, this generates different sets or sorts of opportunities here, depending on your trading plans. Of course, as always, I'm just giving you a generic understanding of what's happening. Of course, I'm using the daily time frame. You guys may use, or some of you may use, a 60-minute time frame, 5-minute time frame. We're all different, but you could certainly replicate the type of rational analysis that I'm doing to your trading plan. Okay, so sunny climate with dollar, but remember what I said. Careful, 7 is more than 5. 102.17, that's where the sell orders are, just a little above price. They were hit earlier in the day. 99.86, way below price, that's where the buy orders are. So if the dollar starts falling, there is indeed room for the dollar to fall hard. And then expected moves, 44 ticks, 98 ticks, and 2.03 ticks per day, week, and month. And the last market I'm going to cover is Bitcoin. So moving to Bitcoin, 1, 2, 3. A very boring price action in Bitcoin for a long time. I mean, really since kind of like February or so, not much has been happening on Bitcoin. Sometimes it goes a little higher, everybody's hopeful. Sometimes it goes a little lower, everybody gets very fearful. The fact is that not much is happening really. Imply and historical volatility for this market is, if I could use a non-formal term, I would say quite boring. But that's what's happening. Okay, that's the reality of what's happening. So what do we have here? Confirmed climate to the downside. Now careful. A normal thing to happen is 5. It's been dropping for 14. So you would expect it to turn, but there are no buy orders until 27,420. So it may end up falling more or just keep behaving in a way that now moves the thick dots to thin, meaning not confirmed as a climate. That would not be surprised this happens any moment. Okay. So yeah. So what else? What else we have? Expected moves, drop of volatility, big time on implied volatility on options on Bitcoin futures. Huge, massive drop of volatility, 689 points per day is what's expected. 1,500 a week, 3,000 plus a month. That's much less compared to the prior week, and less than the prior week, and less than the prior week. So the market is really cooling down, this particular market, which may be how it's about to build up a lot of speed in some direction. So we'll see, because markets that are losing a lot of volatility, it's a little bit of that effect of volatility squeeze, if you wish, where, when nothing at all is happening anymore, then, everybody will jump on board, and then a lot will start happening. So we'll see, and we'll certainly comment on that. So, my friends, we're reaching the end of the session. We have apps, we have courses, we have coaching. I guess you get a little bit of our philosophy. I didn't talk about the courses or the coaching. I'm just highlighting something on the screen in case you want to go take a look on our website and find out more information. But in the end, what we do as a company is we provide trading tools for you to use them properly. We have courses that teach you how to trade and also how to use our technology. And beyond the courses, we also run live trading and things like that. We call it coaching, which is basically to help you to practice what you learn in the courses, so you get good at trading through developing a skill beyond what is acquiring knowledge when you attend a course. And that's what we do. That's our philosophy, okay? But anyway, economic calendar is the last section for today. And I would say today is this week is a little bit of a quieter week, no unemployment number, no big numbers like that. even though there is a little bit of inflation coming in, CPI on Thursday, inflation and number in New Zealand, consumer price index in China as well. So a little bit of inflation stuff, GDP in the UK. So, if you wish, of course, relevant news. I would say from a sensitivity point of view and therefore potential volatility in the markets, everything related to inflation, is still, even though everybody knows about interest rates going up and inflation and all of that, is not something new, but at the same time, it's still a sensitive topic. And if there is any surprise in those reports, it may generate a lot of excitement, either up or down in the marketplace. Anyway, so we're about to conclude. As always, I like very much to flash our book. I'll give you a QR code as well on the upper left side of the screen. We have this beautiful book which talks about trading. We use Forex as an asset because everything is priced in a currency in the end, no matter what you trade. So this book is certainly good if you want to trade Forex, but it's definitely good as well, no matter what you trade. Could be stocks, options, whatever. So it's all priced in a currency in the end, isn't it? So the concepts, the principles, the techniques, the methodologies are indeed applicable to anything and everything. And we are very proud of it for having obtained new first. We have been designated #1 new release in 3 categories in Amazon and all of that. And again, that makes us proud. So hopefully you will enjoy the book as well. With the book, you have access to one of our courses as well as multiple months of access to our technology for free, which is a great way to trial what we do in a way that is educated, instead of just subscribe to a tool, get free access to it, and you don't know what to trial. And you may conclude it's good when it's not, or you may conclude it's not good when it is. So instead, the way we approach it is we give you access to written materials, a course, and the tool, so you can, however it works best for you, you can learn properly how to use it, and then you can trial it, knowing how to use it instead of just guessing how to use it. And from there, you would conclude, how trading works better for you. Okay. Anyway, my pleasure as always to begin the week with you guys. I extended the session a little bit longer today. I guess I was a bit, more talkative than normal. Sorry about that. I'm just realizing I went over by 8 minutes. But anyway, hopefully still good time to spend every Monday to get prepared for the week ahead. Have a good trading week, everyone. See you soon. Stay safe. And remember, we are here to help. So find us on the website. You can message us, email us, etc., etc. Take care, everybody. See you soon. Bye-bye.